It's our 9th edition, and companies with good quality gold assets have performed really well this year. So revenues are up 11% and their share of this sector's increased by 5%. They've benefited a lot by the Aussie gold price, which has jumped 30%, and the low cost economy, and we think that'll continue into 2016.
So the headline findings for this year's report, there were a number of new entrants and a couple of long-standing members of our top 50 by market cap analysis in the Queensland, in the Australian market, that has actually dropped out. A bunch of old-standing fellows. There were a couple of new entrants into the market, emerging organisations. Overall, it was a very tough year for the mid-tier mining organisations. Gold has been the outlier. They've been performing really well. Average market cap has declined by 31%, a substantial decline in market cap compared to last year. We suspect that there will be still some more impairments and some write-offs coming to the tune of roughly about $6.6 billion worth of impairments still to be realised in the next financial year. Overall, the market is stabilising. However, there's been still a little bit of a tough year for most of the mid-tier miners.
In the top 50, we look at ASX listed companies below 5 billion market cap, and the bottom cutoff of that this year is 135 million. Last year was 185, so it's dropped a bit. It's been a pretty tough year. So market cap's fallen about 1.5%, revenues are down 1.8%, gross margins are down 3%, and impairments this year were 5.5 billion. So over 15 and 14, I think that's impairments of 23%, and we expect that to continue into 16 in the coal and iron ore sectors.
Overall, the Queensland miners fared pretty average. There were no outstanding top performers or severe reduction in some of the Queensland miners. Out of the mean of the Queensland miners, the mean market cap reduced by roughly $190 million over the last financial year compared to last financial year. Overall, not too bad performance. Digital innovation in mining nowadays is absolutely the way to go. With all of the massive amounts of data that is available in mining operations, it will be used, and it has to be used as a lead indicator for operational performance, which can drive insights into possible safety incidents that comes up. The use of digital platforms to extract that information and to provide insight analytics is the key to go forward. Safety is obviously paramount in the mining industry. We have had a bit of a decline over the last 2 years in safety records. However, using current information and trending some of the analysis will put the mining organisations and the industry as a whole in a better position to be able to predict safety incidents. Wearable technology is also another big innovative idea that can be used, where you can early detection of fatigue management, early intervention with objects that's not clearly visible to the eyes, especially at nighttime operations. So there's the trend for digital innovation coming into the mining industry is on the ramp up, and it's going to be really a breakthrough moment for the mining industry to start embracing that technology.
The market sentiment's been subdued. Chinese growth is down. So most of these sectors look for private funding, and they're attracted to valuations and the resilient demand in this market sector. We also notice a growing Indigenous economy that is likely to present opportunities for longer term capital growth for the sector. Having said all that, the deals, although in 15 are down, the deal pipeline is very strong. So about 8 times what we saw in the previous year, so hopefully things might start looking up.
I think embracing the Indigenous communities in the mining environment is paramount, such as the technology side as well, where mining organisations need to work closer with Indigenous communities. We are encroaching on their traditional land, and traditional owners of the land is also, we've also found through the analysis that there's substantial amounts to multi-billion dollars worth of amounts available for investment in the mining industry. It is still really early days for mining and Indigenous communities to work together to tap into those funding resources. It is important that mining organisations embrace this opportunity by establishing alternative funding mechanisms and structures away from the traditional capital injection that comes from major financing houses. We've actually seen in WA that there is an operating mine, iron ore mine, that has been fully funded by Indigenous communities. So it's proven it can work. It's a case of mining organisations working closely with the Indigenous owners of land and also the local communities to tap into that as part of a big education process, both sides, for communities and for the mining industry as well.
Well, two things. The change of government has meant that tax reform agenda is accelerated, and I think the sector really has to have a voice in that reform agenda, because it will impact the mining economy as a big part of our Australian economy. And secondly, I think the scrutiny of the revenue authorities, both nationally and globally, is a huge change. It's growing, it's tougher than it ever has been. So the sector really needs to work closely with their tax advisors to make sure that their positions are commercial, that they understand changes in the reform, and that everything's well documented and they're prepared, because the revenue authorities will come and have a look.
Interesting question. A lot of people ask that. In my perspective, we are still maintaining a current state of suppressed commodity prices. There will be a number of consolidations still happening in the market over the next 12 to 18 months. Commodity prices is not projected to have a huge uptick in the next 12 to 18 months. So I reckon we will maintain the status quo. You will see some smaller consolidation, possibly even small miners falling out. However, it's not all doom and gloom. I reckon the positive side of this all is it is the new norm, and organisations now need to start focusing on how do they get the best out of their current assets and the current capital that they have employed, and it is not impossible.